Very good morning to you. My name is Ryan Littlestone from forexflow.live. Today we're going to have a chat about one of our favourite pairs, pound sterling, and the cable as we call it, pound against the dollar. And what we're seeing again this week is further Brexit optimism coming into this pair. The pound's been well supported at the moment because all roads at the moment are leading towards a deal being struck, or at least no deal coming off the table. There's still a lot of things to go through the pipe, as we well know. There's still a lot of volatility in the pair, but we've had a very strong run since pretty much, late last year, coming off the sort of 123 area, 124 area. We had a further dip into the new year down to 127.60 odd down there. I was actually buying that dip all the way down in small tranches just to catch, because I believe that there's going to be a deal coming, or at least no deal is going to be reduced heavily. So what we're looking at here is that this pair is looking to rally higher, and the market's pretty much behind it. The dips are being well bought. We're still seeing a lot of volatility. We only got to look at last week. We broke 133 and a big option barrier up there, only to then see it reverse all the way down and break under 132. So, lots of volatility still in this pair. So it's not something you can take your eye off. It's not something you can give a lot of room to. But the market keeps buying back on the dips and picking it up. And the market is pretty ready for some sort of compromise, either by the EU or Theresa May, to get a deal through Parliament. Obviously, next week is a huge week, because we've got all these votes coming in, the second meaningful vote, the potential vote on no deal, also a vote on whether to extend or not. So there's going to be a lot of volatility there still. I'm still favouring longs. What I'm looking at for my position is a run up to the 135 area. Now, as you can see on the chart, it's more of a longer term level. If we look at the 135 area back over the Brexit vote, we had the big move down, came down through 135, and that was the main resistance area straight after the vote, in the months after the vote. So it's a big level. It doesn't look as technically strong the further towards current times, but it is going to be a big level indeed, because aside from it being that historical technical level, there's a lot of options activity around this area. So it's potentially got the possibility of being a big squeeze point for some of those long-term held shorts. And that's the level that if it breaks, we're going to see a lot of those shorts folding. The options market is covering a break there as well. So a break of that level is potentially going to push us all the way up to 140 and challenge back up to that area. So if you're out the trade at the moment and you want to get in on the Brexit optimism, an area that I'll be looking to add back into longs is down around the 130 area. What we tend to find in a lot of pairs is that when you've had a dip down, like we did, as I say, the latter part of last year, it found itself just above the prior lows before that. So we're looking like we're stepping up. So I would expect, if we do see any retrace here, to see the pound drop to something like the 132 area, maybe 131 might be where it starts to see the buyers come in. But definitely 130, that's going to be a psychological area, and where I would expect the bulk of buyers to come back into the market. Of course, if there's big news that says that the UK is heading for a no deal, then obviously that changes the game plan altogether. So while we've got the normal swings and movements, look for dips to 130 to be well supported. 133 is the current line in the sand up top. If we get above there, then we've got to push on for 135. If we do get big Brexit news and it's positive, then that 135 area is going to be a very, very key point. If we break it, then we're going to get a run towards 140. That's the way I'm playing the pound on the long side at the moment, but I'm happy to sell short-term rallies when they hit the decent resistance areas. Other than that, you trade both ways, watch that volatility, and keep your stops nice and tight. And the best of luck to you.